Why is position sizing and scaling important when trading? There's three major factors you need to take into consideration. The first one is managing your risk accordingly. The second one is maximizing your returns, right? This is all about risk management, making sure you're setting your stop losses. And the third one is ensuring long-term success in the market. So this is being profitable over time and taking the proper risk. So what I did for you guys and ladies is I pretty much set a 5 rules with definitions, and you notice that you can see some of the highlighted parts right here. And if you're taking notes, these would be good recommended bulleted points that you might want to take into consideration. So for the first one, it's all about controlling losses, right? The number one rule in trading is learn to not lose. It's more complicated than it actually seems when spoken. But again, here's some rules, here's some tips, so that this can potentially help you. So, controlling losses. By determining the appropriate amount of capital to allocate to a single trade, traders are limited to their potential losses to a level they are comfortable with, right? So, this is now setting your stop losses and removing the emotions from your trade, right? So, letting your take profit be at a set loss, at a stop loss, and making your risk 5 to 6% below your entry price so that you have a stop loss so that for whatever reason your account does not go to zero. Okay, continuing, this prevents any single trade from having a large impact on your overall portfolio. So again, stop losses prevent you from going liquid, right? Liquid meaning going to zero, right? So if you have $100, you put a whole $100 into the trade. That's called a full portfolio trade, and those are very risky. You might as well be going to the casinos at that point. All right, so the next one is consistent risk. So this is all about making sure that you don't say, "Oh, I'm going to risk 20% on this trade, maybe 40% on that trade," which is a lot. 5% on this one, 2%. You have to be consistent, okay? So if your rule is I'm going to take a 5 to 6% risk to make unlimited, you have to follow through every single time, even though you may get stopped out and lose a little bit. You have to be persistent because this is all about risk management. So let's go and talk about consistent risk. It's the position size. Position sizing helps traders maintain a consistent level of risk across different trades, ensuring that no one trade is riskier than another without intentions. Right, so very straightforward.